Oh, hi, Andrew Bell here with you. Well, of course, after 5 months of no rate rises, the Melbourne Cup rate rise stirred up all of that speculation about the onward journey of interest rates and the impact that it will have across our economy and to our cost of living and naturally to real estate markets. The rate increase was plain and simply a reaction to the stronger than expected inflation figures. Now, inflation is well above the 2 to 3% band which the Reserve Bank aims for. The main drivers of inflation at the moment are housing costs, particularly rent and construction, electricity and fuel. Now, fuel prices have been driven upwards by restrictions to production by Russia and Saudi Arabia after more money, as well as the global reaction to the Israel-Palestine conflict that's on at present. What interest rates can control is already coming back. Things like international travel is now reducing, as is the price of food, less furniture has been purchased, and construction costs are finally starting to slow. Now, monetary policy has done the work already in that space, in the space that they can control. Obviously, we can't continue to have high inflation, and monetary policy is the most straightforward way of now trying to slow the economy even more. Sadly, the real issue that no one wants to talk about openly is employment or unemployment. Now, unemployment remains low, and it's still hard to get staff in many industries. And this is pushing huge cost pressures right throughout the economy. What will be a really significant factor to watch now is what happens with unemployment levels. The first sign on that front is that employment ads have hit a 2-year low, which suggests that the next thing you'll start to see is some job cuts starting to appear in the marketplace. Now, as businesses start to contract in size because of the high interest rates, they'll start to shed staff. The job ads have fallen 11.2% since the peak of September 2022. Of course, none of us want to see unemployment, but it is simply a byproduct of this stage of the economic cycle, where higher interest rates are brought in to reduce inflation. And of course, that flows through slowing economy and higher unemployment. Now, the Cup Day rate rise has drawn a lot of criticism of the Reserve Bank. It's clear the Reserve Bank is behind the curve, and probably more interest rate rises are on the discussion table at present. Comparing internationally, we see that the United States Federal Reserve and the European Central Bank had already priced in a reduction in interest rates by June of 2024. Markets expect the Bank of Canada to also have delivered a rate cut by July, followed by the Bank of England, probably around about August, and even the Bank of New Zealand somewhere around about October. The AMP Chief Economist Shane Oliver said high levels of household debt meant the Reserve Bank of Australia had acted more cautiously than other central banks around the world, leading to the current divergence between the rate expectations here in Australia and abroad. As I alluded to in a report earlier this year, our Reserve Bank was late to start raising our rates compared to its peers around the world. It meant that we've had to go harder and faster in an attempt to play catch up. Our first interest rate rise was in May last year, and that was 7 months after the Reserve Bank of New Zealand, 5 months after the Bank of England, and 2 months after the United Federal Reserve. I just wish our Reserve Bank could learn from past mistakes. The only good news is that the Westpac boss, Peter King, has said borrowers are primed to withstand more interest rate tightening, and that would occur if persistently high inflation is really ingrained into our current situation. Mr. King said that borrowers could accommodate high interest rates if warranted. He actually said borrowers could withstand several rate rises, and said whilst it won't be without pain and will hurt consumer spending, that probably business will be affected to a larger degree, but he believes that mortgage customers have been very resilient to date. Well, certainly we're in interesting times, and I think the message for all of us is adjust our budgets, be ready for perhaps another 12 months of these higher rates before we start to see the downward cycle click in. We're going to have to watch the stubborn factors that are outside the Reserve Bank's control to see how they play out in the months ahead, and that'll determine what happens with interest rates going forward. Now, for the really important announcement, we're now taking bookings for the event 2024. described as the most iconic real estate promotion in the country every year. It's the opening of the annual real estate calendar at the commencement of every year. And it's so insignificant it's now been trademarked as unique to the Ray White Surfers Paradise Group. It's a brilliant promotion that highlights a wide selection of Gold Coast properties. And for 2024, the selection encompasses a special segment of very affordable properties for first home buyers, people on low incomes and investors. And we also have properties all the way through to some of the Gold Coast's most outstanding prestige properties, as well as an excellent array of commercial properties. You know, my brother Greg and I are so proud to have been the creators of this concept, and over the years, it's produced amazing results for those who participate in the event. We're going for some 30 odd years now, and I extend a warm invitation to all of you to be part of this event in 2024. But please reach out to us, as there is a limited number of properties that we can have in the promotion, and our bookings always fill very, very quickly. One other quick announcement, we've got our Tree of Giving all set up ready to go now. We love people. If you'd like to join us, bring whatever gifts you may have, particularly some non-perishable food stuff, some kind of Christmas themed gifts for kids that we can provide to the Salvation Army. Level 2 at number 50 Cavill Avenue. We're very proud to be a collection point for the Salvation Army. We'll make sure all of those who are living tough at the moment, doing it really, really difficult, are able to get some little bit of added help at Christmas time. Love to see you here, and until I'm with you another fortnight's time, all the best.